Hey traders and investors, it's Serge Berger here. Today, I want to talk about a specific strategy that one can apply during earnings season and any time for that matter, when a stock falls to an important support line and what that means and how we can basically profit from it in a high probability way. What you tend to see a lot of times when companies really disappoint is a faltering, either through earnings or whatever the disappointment may come from. You'll see a stock bounce to an important support level. In this case, this is F5 Networks, FFIV, and you can see the support area, right? And it's always important to keep these areas in mind as opposed to a specific to the penny kind of level. But you can see the stock dropped to an important support level. And what happens in the marketplace is a lot of times folks then go out, get all excited on the short side and start shorting the stock. Sure enough, what the stock will then do is actually bounce. And this is a perfect example of one of those things here that happened in FFIV. We had the stock drop down to support on an intraday basis on the 22nd of January. It then proceeded to bounce intraday, closing well off its intraday lows, and is actually continuing to the upside here as we speak. This is not the time to short a stock like that is not right when it reaches support. You want to wait and see time and give it some time. Yes, of course, sometimes stocks will then just slice through this right away, but a lot of times you want to wait for a daily close and see what happens. In this case, if one would have had the patience to wait for the end of the day, you would have seen the stock close well off its highs. It's now following through to the upside for a bounce. What then will happen is that the stock will probably bounce or has a good likelihood of bouncing to a lower high, and that's where you start wanting to be interested in shorting in selling the stock short. So you want to wait for the stock to basically make an oversold and create an oversold bounce that gives you an opportunity to, even if you're wrong, you're not going to hurt us as much as possible. If you sell down here, just think about this from a probability point of view. If you short into this hole, the likelihood or the probabilities of you making money in the short side is actually quite low immediately, because the stock, like I said, will probably find some sort of bargain buyers, whether that's technical or through whatever thousand ways this can happen, and it'll bounce quite sharply. So just from a probability point of view, you better selling high as opposed to selling low or shorting low. So that's a very simple way of doing it. And of course, if you see the stock bump into some sort of resistance area, maybe it's a moving average or some sort of resistance line, that's even better. That'll be the key spot where you could start looking for shorts or areas to look out for where the stock will put in a bearish reversal and you can go short that stock. It's the kind of stuff we do over in the Steady Trader Trade Alert service all the time. So if you are interested, please go over to the steadytrader.com, click on the Daily Trade Alert service. Otherwise, if you've got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.